I made 10 or 15 times my money in Dunkin' Donuts. Those are the kind of stocks I can understand. If you don't understand it, it doesn't work. This is the single biggest principle. And it bothers me that people are very careful with their money. The public, when they buy a refrigerator, they get a Consumer Reports, they buy a microwave oven, they do that. They ask people what's the best kind of radar range or what kind of car to buy. They do research on apartments. When they go on a trip to Wyoming, they get the mobile travel guide, or California. When they go to Europe, they get the Michelin travel guide. People will hear a tip on a bus on some stock, and they'll put half their life savings in it before sunset, and they wonder why they lose money in the stock market. And when they lose money, they blame it on the institutions and program trading. That is garbage. They didn't do any research. They bought a piece of junk. They didn't look at the balance sheet, and that's what you get for it. And that's what we were being driven to, and it's self-fulfilling. The public does terrible investing, and they say they don't have a chance. It's because that's the way they're acting. I'm trying to convince people there is a method. There are reasons for stocks that go up. Coca-Cola, this is very magic. It's a very magic number. Easy to remember. Coca-Cola is earning 30 times per share what they did 32 years ago. The stock has gone up 30-fold. Bethlehem Steel is earning less than they did 30 years ago. The stock is half its price of 30 years ago. Stocks are not lottery tickets. There's a company behind every stock. If a company does well, the stock does well. It's not that complicated. People get too carried away. And first of all, they try and predict the stock market. That is a total waste of time. No one can predict the stock market. They try to predict interest rates. I mean, if anybody would predict interest rates right 3 times in a row, they'd be a billionaire. Considering there's not that many billionaires on the planet, it's very, I had logic, so I had a syllogism and studied these when I was at Boston College. There can't be that many people who can predict interest rates because there'd be lots of billionaires. But you should study history, and history is the important thing you learn from. What you learn from history is the market goes down. It goes down a lot. The math is simple. There's been 93 years a century. This is easy to do. The market's had 50 declines of 10% or more. So 50 declines in 93 years. About once every 2 years, the market falls 10%. We call that a correction. That means that's a euphemism for losing a lot of money rapidly. But we call it a correction. And so 50 declines in 93 years, about once every 2 years, the market falls 10%. Of those 50 declines, 15 have been 25% or more. That's known as a bear market. We've had 15 declines in 93 years. So every 6 years, the market's going to have a 25% decline. That's all you need to know. You need to know the market's going to go down sometime. If you're not ready for that, you shouldn't own stocks. And it's good when it happens. If you like a stock at 14 and it goes to 6, that's great. You understand the company, you look at the balance sheet, and they're doing fine, and you're hoping to get to 22 with it. 14 to 22 is terrific. 6 to 22 is exceptional. So you take advantage of these declines. They're going to happen. No one knows when they're going to happen. It would be people tell you about it after the fact that they predicted it, but they predicted it 53 times. And so you can take advantage of the volatility in the market if you understand what you own. So I think that's the key to element. Another key element is that you have plenty of time. People are in an unbelievable rush to buy a stock. I'll give you an example of a well-known company. Walmart went public in October of 1970. 1970 went public. Already had a great record. It had 15 years performance, great balance sheet. You could have waited 10 years saying you're a very conservative investor. You're not sure this Walmart can make it. You want to check. You see them operate in small towns. You're afraid they can only make it in 7 or 8 states. You want to wait till they go to more states. You keep waiting. You could have bought Walmart 10 years after they went public and made 35 times your money. If you bought it when they went public, you would have made 500 times your money. But you could have waited 10 years after Walmart went public and made over 30 times your money. But the market's going to go up and down. Human nature hasn't changed a lot in 25,000 years. And some event will come out of left field, and the market will go down or the market will go up. So volatility will occur, and markets will continue to have these ups and downs. I think that's a great opportunity. So the market ought to double in the next 8 or 9 years. It ought to double again in the 8 or 9 years after that. Because profits will go up 8% a year, and stocks will follow. That's all there is to it.